The market gives a little back. Is it the start to a breakdown or a bear trap? This is Invest with Jacob. Okay guys, so in yesterday's video we talked about the fact that the market was reaching some critical resistance areas and we'd look for a pullback in a wave 4, but we needed to see support break first, and the market started to drop just a little bit on yesterday, giving us a first red candle in quite a while. So now the question is, are the bulls done? I'll get into that in just 1 second, but first, if you're new here, welcome to the show, guys. My name is Jacob Gabbard, and this is Invest with Jacob, where we use Elliott Wave Theory to break down the SP500 and the NASDAQ. I highly encourage you to hit that subscribe button down below so that you can get our daily S&P updates, our trade setups, and our buy alerts. All right, guys, so before we jump into the charts, as always, we are going to take a look at the indicator. If you're a swing trader, we highlighted that yesterday. It's a very powerful swing trading tool. Check out yesterday's video for that. We're going to go back to day trading today. If you're not familiar with this, we created our own trading view indicator that you can use, and it's a very simple indicator. It gives you buy and sell alerts with stops. Let's jump into the chart and take a look. Okay, guys, so here we are on the 5-minute SPY chart, and this is what we use to day trade off of. The indicator works with trading view only, so you do need a trading view account, and you need real-time data on the ES and the NQ, and it's giving us real-time trading signals that take the guesswork out of the market. On the screen here, you'll see on the left a blue area and on the right a blue area. That is after hours trading. We don't trade during that time, but we do need it on for the indicator to work properly. In the middle in the white, that is our regular trading hours. And for me, I only trade until 10 a.m. Pacific Standard Time, because after that, the market tends to get pretty choppy on most days. And this is a morning business, the day trading game. So as we look at the chart here, again, 5-minute SPY chart, and we're looking for our buy and sell alerts. We get a sell right out of the gate. And we got something that's been happening this week that doesn't normally happen. So several days this week, we've seen the ES or the SPY trading up while the NQ is trading down. And that's what happened in the morning here. We got a sell signal. The NQ continued to trade down, and the ES traded up. So they were ahead divergence, and they were out of sync. So once they get out of sync, you won't get another signal until they sync back up, which they did back down here. And you got an awesome buy signal down here right near the lows. You took this buy signal all the way up, and then what we did today is you got this sell signal right here. And so what we did is we took profit right here. We entered short, and we were able to set our stops. As you can see on the screen, you set them 50 cents from price. So price here was about 608.09. We set our stops to 608.50. Our high today was 608.48, so we did not stop out. We held, and then we moved down and had an excellent winning trade right here. So two good winners today, a quick loser at the open, so they didn't sell here. So you had one quick loser and then a really nice winner that way and a really nice winner to the downside. And this was great because we were able to exit basically at the high of the trade. So we took almost full profit. Not quite. I mean, they did push it up a little higher, but then they rolled over and we got to take that full profit as well. So the indicator, guys, it makes trading so simple. It's helping hundreds of traders absolutely kill the market. We give you trading videos, how to use it, how to understand it, where to set your stops, how to take your profit and when to take your profit. We make it super simple so that you don't have to look at 4 charts and try to figure out where the fair value gap is or where price action is. This is a price action indicator. These yellow lines, if I scroll over here, you'll see that's the pre-market high. That's the this week's high, yesterday's close. These are all key levels. And you can see the sell comes right near the pre-market high, and it rejects that area and gives you the sell. The buy comes right off of the pre-market low. It rejects that area and gives you the really nice rally. So it looks for several different things, but it's a price action indicator so that you can do price action. You can do trading without having to look at all these different charts. It is a synced trading algorithm, meaning the SPY, the NQ, and the ES need to be in sync, which gives us a greater chance of the trade moving in the right direction when all the markets are doing the same thing. Because when you have divergence in the market, you get a choppy market. So an excellent day for the indicator. 2 big winning trades and 1 small loser at the open. If you're interested in getting this indicator, there's a link down in the description. Go ahead and click that link, and it'll take you exactly where you need to be on our website. It's under membership plans. It's our Trading View indicators and courses area. The indicator itself is $59 a month. If you saw our swing trading side of this in yesterday's video, you'll know that you'll make that so quickly in the swing trading and the day trading kills as well. This indicator pays for itself very quickly. And because of that, I'm willing to give you a 30-day money-back guarantee. So you get to try this for 30 days. If you don't like it, shoot me an email and say, hey, this wasn't for me, and I'll refund your purchase, and you'll just take away access to the indicator. That's how much I believe in this product. That's how much I want you to have it. It will help you finally understand the market and finally be able to actually trade the market with discipline and understanding and knowing that if you just follow the rules, you will do well. We have months and months of data showing our profits doing well, and that's what we want you to have as well. So if you're interested, click that link and head over to our webpage and get it. Now let's jump into the chart and take a look. Okay guys, so here we are on the 1 hour futures chart for the S&P 500. And we talked yesterday about this area being a topping area for this wave 3 here. We were looking for it to pull back. Okay, 60.85 was the area it had to hold to be a wave 5. It kind of pushed through that. So we were looking for a pullback from around this area. And what we're seeing here is the start of that pullback. Now in yesterday's video, I talked about what key levels mean and why we give 2 different directions and 2 different paths. I highly suggest you check that out as it is very informative on how to use Elliott Wave to fully understand the market. Right now, we're simply in a small pullback. Nothing has really happened that has changed anything. We're still in wave 3. Now, if they come down and break this key level at 60.46 right here that I have drawn across, if they break this key level at 60.46, then we'll be looking for them to come down toward the 59.50 area, the top of this wave 1, for wave 4, as we are in a diagonal, and wave 4 and 1 should overlap in a diagonal structure. Do they have to? Of course they do not, but they generally do, so that's what we would look for. So what we're looking for is a pullback into that area that probably bounces because they're going to hold support the first time on most occasions. Probably look for a bounce and then a move down into that 59.50 area. Can they spike through and make it a little more symmetrical like this? Absolutely. But what we're essentially looking for is an ABC pattern down in this wave 4, and we're looking for the top of wave 1 around 59.50 to hold that wave 4. Now, as long as they do hold that, we would look for a pretty strong rally in an ABC format in wave 5. And that's going to take us back toward the 6250, 6300 level overall, where we'd look for an ABC to conclude this diagonal structure. And we would be, again, looking for that 6250, 6300 area to the upside should they hold this. And as I mentioned yesterday, how do you trade Elliott Wave? Well, first, you can look for this AB setup right here. So you look for them to break this support or bounce off of support and then give you this C wave setup, a 1-2, because then you would expect a wave 3 down, which is the strongest wave, and then 4 and 5. So you get this 1-2. You enter your trade on the bounce. You have your stop right here, and you have this kind of downside. So you have a really good risk reward here. Excellent trading. Same thing goes if they come down here and hit this price and give you a reaction to the upside. You look for a 1-2. Now you have a place to enter your trade. You have a stop as a low right here, and you've got all of this upside. So this is how you set up Elliott Wave and use it to trade. Everything I talk about in these videos isn't a trade. It is simply what we're looking for in the market to do next. And if it doesn't do that, then we move on to the next setup. We're looking for a setup to trade, and that's simply it. So we get the setup, we will trade it. Otherwise, we will wait for the next available setup. So just because I say the market is coming down in wave 4 or we're looking for the market to come down in wave 4 doesn't mean I'm trading that. It means I'm looking for the setup for that wave 4. Now, full disclosure, this is a high resistance area at 6100, and we did short basically the top today. We have a short trade that is a swing trade where we're looking first, hopefully, to get down to this region here and take profit. Let the runners go on the bounce and see if we can get this move here, or potentially take all the profit here, just depending on how quickly we get down there and how much time we have left on the trade. So that's what we're looking for overall. We did short basically the highs today, very close to the highs, and we are looking for 60.46 next. Over on the NASDAQ. All right, guys, we're on the NASDAQ, and before I jump into the NASDAQ, I want to talk about why that 6100 was a major resistance level and why this 21,585 area is a major resistance level. Number one, we are far away from the 21 on the weekly chart. Number two, you have big call walls on the options market. Number three, you have fibs and Elliott Wave counts that tell you that we should be nearing a turning point in the market. And you have a fairly full 3-wave count to the upside. So we are looking for a wave 4. We are at heavy resistance. We are looking for a rejection. And that's why this is becoming a very heavy resistance area. So if they are able to push through this area, then you should see a pretty strong squeeze, probably to 6,200 directly on the ES and 22,000 directly on the NQ. But more often than not, they're going to reject these areas on the first time through. So we use a lot of things along with Elliott Wave to tell us where strong resistance and support levels are. Chart chart levels, things like that. But when you're at new highs, there are no chart levels. You're above all the chart levels. So then you have to go to other things like fibs, call walls, put walls, the 21 moving average, support from moving averages, things like that to find these levels. So very important to understand that. And all of that gets taught in my room. We do a daily call where I go over that. I go over not just the ES and the NQ, but I go over trading. I go how to trade, what the levels are. I go over concepts. I teach. We also go through like gold, Bitcoin, NVIDIA, SMH, XLF, the transports, everything you can imagine we go through. If you have questions about a chart, we go through all that on the daily call. So you should check that out. All right, so as we jump into this chart, we are again looking for a wave 4 pullback. That wave 4 pullback should come back toward wave 1 territory. That wave 1 topped either, it can be in two places. Wave 1 could have topped here at around 20,900, which is where we'd expect this pullback to come down to. And it has an alternate top here at about 21,083. In any case, we're looking for that one of those two levels on the pullback, again in a three-wave structure. And then we look for that support to hold. If we see that support hold, we would expect another rally towards 22,500 plus to as high as 23,000. So there is room to the upside, especially if we get a pullback that holds. We could see a pretty strong rally up toward that 22,500 to 23,000 area. Like I said, if they do extend directly, we could see them rally to 21.9 if they break through this 21,585. We'll call it 21.6 to give them a chance to really break through. We don't want them to kind of push above and then do this. So if they can break through 21.6, then 21.9 becomes a very viable level in a quick way, as we would see a pretty good squeeze off of this resistance zone. So anytime you have major resistance like you have right here, they're either going to reject it or they're going to grind through, and when they grind through, it creates a squeeze, which should create a very quick launch to the next major area of resistance. So that's what we're looking for on the NASDAQ. A breakdown of this level, should they break through 20,900, we'll start to raise our eyebrows and see what's going on. And that could potentially lead us to a top, but there's a lot that has to happen before that comes in. So looking for a pullback into the 20,900 to 21,083 area. The level that tells us that is the 21,150. If they break through that, we're looking at about a 200-point drop. So they can come down, test this support, and still be okay. That would be a little bit different of a count, but that is still a possibility for wave 3 below this support, and we're looking at wave 4. Guys, if you love the information I put out in these videos and you want real-time market updates from me, you need to check out investwithjacob.com. There's a link down in the description. Go ahead and click that link. It'll take you over to our website. Once you're there, check out our membership plans area. We have 2 incredible monthly plans that both come with a 7-day free trial. That's because I want you to get in there, interact with everybody, meet the team, make sure it's for you. You don't even have to trade. You can just sit there for free for 7 days, observe, see if it's for you. If it's not, simply cancel. You can do that at any time and move on, and nothing happens. Or if you love it, you can stay on with us and learn Elliott Wave and trading and make some money with us as well. We also have yearly plans where you can get a 7-day free trial and a discount on your yearly price. But the really cool thing about what we have is our training material. We have our Elliott Wave for Beginners course. We have our Advanced Elliott Wave course, and these courses are helping traders understand these complex markets, understand the key levels, how to trade them, and how to understand them. In our advanced class, we're going over exactly what we're talking about right now, which is diagonals. Shows you how to count them, how to understand them. They're very tricky, very difficult, very hard to navigate. They're one of the hardest things you can have in Elliott Wave because they are so variable. And that's why we usually wait for really good setups when we're in a diagonal before we trade. We also go down and we trade the go through the double and triple threes, the flats, the triangles. I do a whole thing on how to trade Elliott Wave because it's important to understand when the setups are and where they are. And not just everything is a trade in Elliott Wave. We don't just say, oh, well, the market's supposed to go up here, so we'll trade up. We look for setups and we trade great setups. As you can see on the screen, our traders love this, and they're really doing well with this course. But if it's too advanced and you're just getting started, check out our Elliott Wave for Beginners online course. This course is helping real traders make real money and finally understand the market in a way that makes sense. The most important part of the stock market is key levels. It has nothing to do with the news. The news is noise. It makes no sense. Good news makes the market go down. Bad news makes the market go up, and then vice versa. They all switch around, so it can't correlate to the market. That is the first thing you have to understand about trading, is that the news doesn't affect the market. It's simply a catalyst that allows the market to do what it was going to already do. You can see this clearly when you see things like CPI. And before the numbers even out, the market jumps 30 points or drops 30 points. That is a big drop before you have any information whatsoever because the market was already planning on dropping. Then they get the information. They're like, oh, it was a good reading. How come the market went down? Because the market doesn't care. That's a fact. Now, Elliott knew about these key levels and how to find them, and that's what gives you a huge advantage over the rest of the market. In this course, we have 25 videos where we go through 3 parts. Your introduction, where we introduce you to Elliott Wave, mindset and emotion, KISS method, etc. Chart setup and tools, all of the different tools we use with Elliott Wave, how to use them and why. And the Elliott Wave for beginners area where we go through each of the waves, how to use them, the theory of alternation, corrective depth theory, the pivot, everything you need to know to make sense of this irrational market. The cool thing is, if you want these courses at a discount, we have our course bundle where you get $37 off and you can get the entire package. Or if you just want to get them for free, check out our monthly rooms as the training material is included in this price. So for $49 a month, you're getting everything plus the training material. You get all of my real-time market updates, all of my buy and sell alerts, all of your Elliott Wave questions answered. That midday video that I talked about earlier, we go through all of the stocks, all of the charts, training, how to trade, how to get trade setups, how to understand the market. And on top of that, you get all of the Elliott Wave courses, the beginners and the advanced course, and any other training material I put out in the future. We trade the SPY and the QQQ, and we swing in day trade, so I do trade quite often in my room. But if you're looking for futures trading, individual stock, income trading, and advanced training, you need to check out PT's Throne Room. In there, you get everything you get in the Invest with Jacob room, as well as individual stocks, futures trading, income trading, and his reduced risk binary method that crushes the market. He gets you in at a cheap price and gets you big multiples on your money, and that's how he structures that trade that's so unique. That's another reason we give you that 7-day free trial. He also started a challenge account where he put $4,000 into an account, trading mini ES futures, showing you how to build a small account into a large retirement or savings account. Guys, we'd love to have you in these rooms so we can all make money together. All right, our key takeaways for today. We are seeing the start of a very, very small decline so far. They do need to break down. It's very likely they come into this 60-46 area and bounce if they're going to continue to the downside. And we look for an ABC down into that 59.50 area for wave 4. Should they do that, we would look for them to hold support and then push higher in wave 5 towards 62.50 to 6,300. Can they extend higher? Of course they can. If they do, it's very likely to turn into a squeeze, as this is a heavy resistance area, and 61.50 to 6,200 would be our next 2 targets higher. Over on the NASDAQ. On the NASDAQ, same type of deal. Very small pullback so far. We're looking for this wave 4 to commence. We'd like to see them pull back into this 20,150 or 21,150 area potentially and bounce. Then give us the rest of the move down into that 20,900 area to give us a wave 4. Then we'd be looking at wave 5 back towards the 22,000 plus areas. If they extend directly, we would expect a squeeze towards 21,900 in a more direct manner. Guys, it's the weekend. Grab yourself a drink, get out of the house, spend some time with your family, and I will talk to you next week.